Hey traders, a very warm welcome to you. So this is a video for brand new traders, and I thought I would address this simple question, which kind of, if you haven't got involved in trading, why would you know anyway? So how does day trading work? What is day trading? How does it work? What is it all about? Okay, let's explain from the very beginning. So trading, as you may be aware, is when you're buying or selling something. You're buying with the expectation of it going up. You're selling it with the expectation of going down. Go and check out the videos on long and short to get the difference, but fundamentally that is what we're doing. Okay, but let's stick just with the buy for now to make it easier, so not complicating things with going short. So as a trader, we can buy an instrument that our market that we think is going up. That could be a currency, that could be a commodity like crude oil or gold or corn. It could be a group of stocks known as an index, like the FTSE 100 is the 100 shares in the UK. You've got the DAX 30, you've got the Dow 30, you've got a variety of different indices, and that's kind of a popular thing for people to trade. You've got interest rates, you've got stocks, individual stocks like Apple, and shares in the UK like Vodafone, Tesco's. Fundamentally, what we're doing is we're looking to buy something at the low side and sell it when it gets higher up for a profit. That is ultimately what we're trying to do. Now, as traders, we can then do what's called day trading. Now, day trading is basically saying, hey, I will open and close all of my trades within a day period. So the advantages of that are you're not taking any overnight risk. The disadvantages are you can only capture the move in the day. So day traders tend to be a lot more frequent traders, tend to do multiple trades a day in the same instrument or multiple instruments. But what they also tend to do is they tend to use what's called margin, which is go and check out a video for a more deeper explanation. I've done a video on it before, but ultimately it means that you're getting more leverage on your money. So, you know, if you put down £1,000, you're probably going to be able to buy £10,000 worth of stock or even £100,000 worth of currency. So that means that if it moves, 1%, you're getting a much more move. So it makes day trading possible. It's very difficult to day trade if you haven't got that much money and you can only put up a certain amount because the moves are not going to be that big. So how does it work? So what we're trying to do with day trading is we're saying, listen, I think that this stock here, let's go to the stock, XYZ stock is, it's a buy at 100. So I buy, and was what's called going long. So let's say I go long here, and let's use a spread betting example. So we go long at £10 a point. So for every point it moves, we're going to make £10, or we can buy 1,000 shares or 1,000 CFDs would be the same as that. This now market then goes up to, let's say, 105. So we've made it's gone up 5 points, and we've made 10 times 5, we've made £50, and that would be the same for 1,000 CFDs. So what we're looking for is that it happens in the day. We don't want to close overnight, so we know the closing time of our market, so we know we're completely flat. We're looking to buy and sell in the day. So let's say the whole day, kind of this is doing this, the market's doing this, it's coming down, it's going up, it's coming down, and that's the close here. Okay, and we're trading just one market. As day traders, we are looking to capture as much of that as possible. Now, obviously, there's something to be said for not getting too active in it, but let's keep it simple for now. Let's keep it basic. So, a day trader, if we're looking to buy, we say we're looking to buy here. We want to try and hopefully sell here, of course. If we bought here, we would want to come out as quick as we can so we don't lose too much. So we're not giving back the gains from that. And let's say we're lucky enough to buy here, and hopefully we'll be coming out here, or in reality, the real world, we'll probably end up coming out, kind of here perhaps, and then we'd miss that one. Or maybe we'd buy here, it wouldn't go too much, we'd get stopped out here. So the idea is that in this day period, we are looking to make multiple trades. We're looking to open the trade, close the trade, take our profit or a loss, look at the next trade, open the trade, close the trade, take a profit or loss, next trade. Now, we can trade multiple markets, of course. We can say to ourselves, okay, this is the market. Let's say this is the DAX, for example, which is the German index. And we could also be trading the FTSE as well at the same time. Now, we've got to be careful, they're quite correlated. We can talk about that in another video. But let's say we're trading a few markets, so we might go buy this one, and then we might buy this one 5 minutes later. We're going to close it again before the end of the day, going to close it before the end of the day. So ultimately, that's what we're doing as a day trader. An intraday trader, as sometimes it's known as. We're opening on the same day, we're closing on the same day. and we're going home with no positions, so we can look at the next day fresh with a fresh set of eyes, looking to see how we can capture those intraday fluctuations in the price as the price goes up and down with supply and demand, hoping to make some money as we trade throughout the day.